China faces a lot of challenges in its transition from an export-led economy toward a more domestic, consumer-led economy. And the impact of that transition is being amplified in markets around the world, but more so because we exist now in a digital age and not in a analog age. So despite everything, I think we have to consider that the Chinese GDP for 2015 was still around that 6.9% mark. Now, I know when it comes to numbers coming out of China, you can sometimes take that with a little pinch of salt. People aren't always sure about how good those numbers are and how tight those numbers are. But I think if you look at, for example, Chinese tax receipts in 2015, they grew by roughly the same amount. Well, we need to accept that in an interconnected world, what happens in China, the data releases from China, they are going to have a greater impact on markets around the world. And that is going to be something which is going to become normal from now on. The Fed is no longer in a when will they raise rates rather than if they will raise rate territory, like they were pretty much the whole of 2015. So they've gone ahead and raised rates now, and I think that the pressure is off the Fed. Forward guidance worked in their favor, but it also worked against them. The market had interpreted very loosely the criteria that the Fed was laying down, but now that they've actually gone ahead and raised rates, the pressure really is off, and even that first hike has been commented upon by some analysts actually as a face-saving measure by the Fed. If they hadn't have done it, then what would have been the meaning of all of their forward guidance? So from here on, if the Fed is to raise rates, I think that that will be data dependent more than from any kind of political or market pressure to actually do so. Tools that central banks have available to them have by no means been exhausted, and they will always interfere in the markets when it is necessary for them to do so. Commodity prices have tanked. Some of that is due to oversupply in the market. Some of that is due to new streams coming on board, such as the shale gas and shale oil producers. The market has already priced in Iran coming back on stream. And then as well, there are other forces at play where Saudi Arabia and some of the OPEC members want to compete against the newcomers in the marketplace, the new technologies in the marketplace, such as the fracking companies and the shale producers. And then as well, there is an element, or there is possibly a political element to the prices of commodities too. And so some of what we're seeing could also be described as actually a return to normal. The easy speculative money has gone from the marketplace. The Fed started tapering in December 2013, and we should as well consider that it's not necessarily bad news. In fact, low commodity prices is great news for anyone who actually has to shell out in order to buy the stuff, which has been trading at grossly over inflated prices for pretty much the most of this century. And I think that these lower prices eventually they will translate as a massive boost to consumer economies like we are seeing just now.